All right, let's see if I can do this walk and talk. Ladies and gentlemen, we're here in New York City. We're headed to the New York Stock Exchange to do another interview with Peter Tuchman, 40-year Wall Street veteran here at the New York Stock Exchange. There he is, Big Drew. What's up, buddy? How you doing, buddy? Doing all right?
Look what I got.
Oh, you got your number? Peter is going to be giving us an insight on how the New York Stock Exchange came to be, what currently happens here today, and what his main role at the New York Stock Exchange is. Stick around to the end. We got some tips for you guys for your trading and how you guys can have better success following some simple professional rules.
Everything I know about day trading, I've learned from David Green, and we've taught in Wall Street Global Trading Academy. Go to Wall Street Global Trading Academy, and that's all I got to say about that.
We're back at the New York Stock Exchange for another incredible interview with none other than the man, the myth, the legend, Mr. Peter.
Boom! Chartaddicts, how you doing? Einstein on Wall Street from the balcony at the New York Stock Exchange. Welcome.
We got tons of things
back again.
Tons of things to
we do.
Very interesting conversation. I want to talk to you about trading. I want to talk to you about global Wall Street. I want to talk to you about the history of the stock exchange. Okay. So if you can just give a brief intro on the stock exchange real quick, how we got to here, and then we'll pick up from there.
Cool, awesome. So we are here on the balcony of the New York Stock Exchange building, built in 1903, the greatest financial institution in the world. Ceilings all gold. We've got incredible inlay here of tobacco leaves, which brings me to the fact that what are we doing here actually on Wall Street? We're in Lower Manhattan. Wall Street is right behind us. Wall Street actually was a wall. Above the wall in this island of Manhattan was all forest. Below this, there's two rivers, Hudson River and the East River, that come into the base of Manhattan where the Staten Island, where the Statue of Liberty is. Boats used to come in the 1650s from all over the world, bringing produce and commerce into New York City. Back in the 1650s, there were already 26 brokers that used to work the corner. You know what I'm talking about? Working the corner? That used to be the way Wall Street was. They used to be out here in front of what is now this building, under a tree called the Buttonwood tree. When the boats would show up, they would take wheelbarrows down to the port and bring the commerce in, the tobacco, lumber, spices, whatever it may be, bring them up to the Buttonwood tree and put buyers and sellers together and make deals. That was the precursor of what we do here on Wall Street. That went on from 1650 to 1797. In 1797, they signed an agreement called the Buttonwood Agreement, which basically designated business practice. These 26 brokers charge a certain amount. My word is our bond. A handshake is a consummation of business. Going forward, this is the way we do it. If you want to play in the pond with us, you've got to deal with these 26 brokers. That was the beginning of what went on to become the stock exchange. In 1850, they built the first building here. In 1903, they built this building, which now is 130 years old. The traditions that go on here, the opening bell, the closing bell, the trading, 3,500 public companies, 1,366 seats on the stock exchange, kind of like taxi medallions gave us the right to trade, established in 1903. That brings us to where we are in 2024. We've got 33,000 plus stocks, market-making firms, traders, brokerage firms, all coming together every single morning, starting with an opening bell, pricing stocks based on supply and demand in an auction market, off to the races. We are the greatest pricing mechanism of all markets in the world. We don't do 80% of the volume that we used to do. We do 30, but we still are the ultimate pricing mechanism. Every market is based off of this. What makes us better than everyone else is we're the last human marketplace in the world. We are the only place with circuit breakers, meaning that when there's volatility, when there's a crisis event, we actually slow down and stop trading. We saw it at GameStop. We stopped trading 29 times. We've seen it during COVID where we opened and closed due to the market being down 10%. But we are the only market in the world left now with human beings at the point of entry, trading stocks with market makers, doing what we do best.
That is an incredible breakdown, and I really appreciate that.
And that's all we got to say about that.
It's incredible that the New York Stock Exchange is the only place that still has physical action taking place. But you actually mentioned something interesting. You mentioned the Robin Hood situation.
Right.
For most people watching, that's probably something close to home. Could you explain what happened there?
Sure, absolutely. So first of all, realize that up until 2020, there was what we call, in order to be involved on Wall Street and buy stocks and invest in your future, you had to be an accredited investor. What did that mean? That meant when you opened up a brokerage account at Merrill Lynch or Wells Fargo or Morgan Stanley, the old traditional brokerage firms, you had to prove that if you lost 100% of this money, it would have no effect on your standard of living for 5 years. Well, what did that do? That was very exclusive. That basically kept almost anybody out of trading except the super 1% of the 1% who were wealthy people. Who could really say that if they put $5,000 into a trading account and lost it all, it would have no effect on their standard of living? I know I couldn't say that. So up until that point, this place was a very exclusive place. Only the wealthy of the wealthy could really invest in the market, right? People were invested in the market in 401ks wherever they worked and stuff like that. So people did have access to markets in that way, but like we know it now, like day traders, like in people trading and investing in the market, that didn't exist. What changed in 2020 with the event of Robinhood and Webull and all these free trading apps was they suddenly gave access to the marketplace to everybody. Suddenly, everybody with an iPhone and $100 could trade the market. What an amazing thing. Now, I know a lot of the guys down here, sort of want to keep that exclusivity. But for me, somebody who's been down here for 137 friggin' years, for me, that acceptance and that inclusiveness was incredibly important because you all are the next generation of traders and investors in the world. And I think that's a super important thing. Suddenly, we had all these brokerage firms start. You could have a free trading app, and it happened. Look, it's kind of like the perfect storm in a way, because suddenly we had COVID. Everybody's locked in place. Everybody's getting a little bit of a stimulus check. Suddenly you got Webull and Robinhood, free trading apps. You have the meme phenomenon happening. You've got Wall Street bulls, bets, and friggin' Reddit, and the whole place friggin' explodes. You got GameStop going from 2 to 483 and back to 2. And suddenly everybody thinks that this is a get-rich-quick scheme. Everybody's posting pictures of them lying around on the back of a Bugatti wearing fucking pajamas, excuse my language, with stacks of $10,000. And suddenly the world thought that, first the world suddenly did have access. People were trading. Fortunes were made, but I would say probably more fortunes were lost because people didn't talk about the fact that they never sold their GameStop at 480. They probably held it until it was back to 2 again. But anyway, so this was an amazing phenomenon, right? I call it the democratization of the trading community. Suddenly, 40 million, according to TD Ameritrade, 43 million new retail traders came into the marketplace on March 23rd, 2020.
Wow.
Amazing. What an amazing opportunity and amazing accessibility to this market. And I think it's the beginning of the rest of time. However, none of these platforms gave us any education as part of the thing. So it's like think about it. If I wanted to fly a plane, right? I wouldn't just go to Teterboro Airport, grab the keys, hand the guy a 50, grab the keys, hop on the plane, and hope it works out, right? Same thing with money. You can't suddenly, after excluding people from the marketplace and trading and investing for 100 years, suddenly give people access and not give them education, not giving them the playbook or the menu on how you trade this market. How do you buy it? How do you short it? What do you do when you get into a stock? How do you protect your downside risk? All that education was not included by any of them. Any of the platforms that gave you accessibility gave you education. And that's kind of where I stepped in with my partner, David Green. We created Wall Street Global Trading Academy because we saw the amazing inclusiveness of the 40 million new traders, but we also saw the possibility that everybody could get into this market. They had access, but they didn't. Look, you know what I do? I love this, and the analogy of if I suddenly, you were never invited to my house and I threw these crazy wild parties, and then suddenly you've been begging me for years to get in to my party. I let you in, and I don't tell you that if you drink 12 vodkas, you're going to get really sick and you're going to end up puking out on the back lawn, right? If I told you you have one vodka and hang out and you can have a really good time, that would be fine. So that lack of education in this amazing new platform with this amazing new phenomenon was the key. And so David Green and I took this opportunity to say, you know what? We have experience. We're long timers in this industry. It is our responsibility to educate the masses of people out there who are suddenly so excited to get access to this party, so excited to see the volatility and the excitement, so excited to make money, right, and get involved, whether it's crypto, equities, futures, whatever you're doing. But that amazing, that thirst by this young new retail phenomenon and generation suddenly having access is amazing, but without education, it is a potential disaster.
So you're saying education is the great equalizer between institutional and retail, but a lot of retail traders feel like no matter how much they learn, they still feel disadvantaged because they don't really understand how the institutional side works. Do you believe that traders have a fair chance if they have the right education?
Okay, if you learn the game and you understand how trading works, and you become a successful trader, you learn technical analysis, you learn price action, you learn about risk management, which means stop orders. The stock market gives you this amazing tool that can protect your downside risk. What does that mean? That means if I put 100 shares to buy at 50, I can put in what's called a stop order at 49.5, so that if the trade goes against me, I'm not going to lose. I can identify how much I'm willing to lose. And so think about it. I'm willing to lose $50 to make $200 every day of the week, but I'm not willing to risk 200 to make 50, because if I have one losing trades, I need 4 winners to get even. So the rules of the game need to be identified, need to be learned by everybody. When somebody is a successful trader, they're not worrying about what the institutions are doing. When someone is unsuccessful, they love to blame somebody. They blame the market maker. He sees my stop orders, that's why I don't use them. Right, he's out to get me, la la la. Trust me, the bigger players in the game are not out here to hurt retail investors. They're not out here, the market makers are not out here to screw the retail investor. They have look, I've gone up to them, I've been trading with them for years. David Green, my partner, was a market maker in Bank of America, some of the biggest stocks in the world for many years back in the 90s. At the end of the day, those people who you guys, the retail, and I say this is I throw out a broad blanket on that because I hear it all day long. I'm boots on the ground. I have a deep connection to retail traders on social media who will say to me, they're all out to get me, they screw me, those guys see my stop orders, they take the stock down to my stop order, they take me out, and then they run the stock up $5, la la la. You're always hearing when people don't learn the rules and don't get the playbook, and they are unsuccessful at trading, they will find someone to blame except themselves for that lack of education. Look, if you are hungry, I can give you a fish, or I can teach you how to fish. You'll never be hungry a day in your life. The best defense against the rug pull, right, which happens in all businesses, whether it's NFTs, whether it's equities or whatnot. In business, we've seen it with the Zach Morrises of the world on Twitter Space, guys who are out there pumping and dumping. Going back to Jordan Belfort, there are bad guys in the space. But if you learn the game and you get the playbook and you do your due diligence and you educate yourself on how to trade, what you do, anybody can hit a buy or a short button, but you need to understand what you do when you get into the trade. How do you execute? Look, executing a losing trade is the same as executing a winning trade as long as you do it correctly, right? So at the end of the day, don't blame people for your mistakes and lack of education. Don't think this is a get-rich-quick scheme. You will get out of this what you put into it. If you want to learn how to trade, Wall Street Global Trading Academy, David Green, my teacher, mentor, and friend, is one of the masters in the space. And it doesn't happen overnight. You will get out of it what you put into it, right? It takes probably 3 to 6 months to become a trader. You don't have to lose money learning how to trade. Whether you're trading futures, look, there's all kinds of great stuff going on within the funded futures trading market, right? There's a lot to learn with the Weebles and the Robinhoods and whatnot, how you enter a stop order, how you get in using Thinkorswim, interactive brokerage, whatever it is. There's a way to do this correctly. There's a way to educate yourself so that you are successful at it. Let's be clear, the numbers are that 8 out of 10 people who try day trading do not succeed. So the odds are against you. So you need, when you're in a situation, whether you're climbing Mount Everest or trading stocks, when the odds are against you, you need to identify the odds and do everything in your power to protect yourself on the downside.
To
answer your original question is, don't worry about the institutional guys. Look, I am an institutional guy. I trade for large institutions. I trade for hedge funds, okay? And I treat them the same way I trade retail traders. So they're not getting preferential treatment. Do they have access to more information than you guys? Very often, yes. Bloomberg costs $25,000 a month. no retail trader I know is going to pay for that. So they have access to information, they have access to research, they have access to a lot of different platforms that you guys don't have. But that doesn't mean they're at an advantage. They are, look, they're whales. They are different, right? Look, hopefully, if you do what we're going to try and help you learn how to do, and you become a trader and you want to do more and get a job as a portfolio manager or get a job at Morgan Stanley or Wells Fargo and go on to become someone in the industry as opposed to just being a day trader, okay, then you can play with those whales. But now look, envy is a really bad emotion. Jealousy is a bad emotion. Identification is the key emotion here. So don't worry about them, right? There are things that we have no control over. You are powerless over what the whales and the institutions are doing. Trust me, from Einstein to you, they're not out to get you. They have no bad things against retail traders. Focus on what you're doing. Focus on learning the game. Get the playbook. Get the menu. You can do it at Wall Street Global Trading Academy. You can do it with my friend over here with Roy. There are plenty of good people. Find a mentor. Find a coach. We do that. We have a course that's 16 hours, 21 videos, 200 hours of content, right? We do Fibonacci. We have masterclasses on options, swing trading, all that kind of stuff, watch lists and whatnot. We coach and mentor all our students every Thursday night live. We have a boot camp where for $6.99 you can get into David's private trading room and learn the course in real time. You buy the course, you study it for 3 weeks. We have a private guy who will help you set up all of your charts for you, teach you the technical analysis necessary, which is in our course. Then you spend a week in David's private trading room learning how to trade. That's what you need. This is not easy, but it's simple in a way that we tend to overcomplicate things. You need to learn the basic tools, the education that's necessary to become a trader. I'm all about hitting singles and doubles. If you're out there trying to hit home runs, you're liable to make a big mistake.
That's such a good one. Now, I want to help folks understand more about you and David's backstory. Like, how did you and David get introduced? What is your timeline with David? And what do you feel like are some of the biggest takeaways that you've gotten from him since you met him?
So, David Green and I started here on the floor of the stock exchange in 1985. I got my first job here. I was 27 years old. I got down here. I had done a lot of things. I got a degree in college in agriculture and in finance. I moved back to New York. I was trading commodities. I opened up a record store. I was the doorman at Studio 54. For those of you who have any memory of that, we can't talk about anything else about that period of time because I'll have to kill you. Anyway, what else did I do? I had a record store. I was trading commodities, and I was going to business school. I was going to Baruch to get an MBA because I thought that was what was necessary to get into finance. I never finished the MBA, though I did make a pretty good effort at it. I ended up getting myself in a bit of a jam. I left the country. I lived in Africa for 2 years doing the accounting for a Norwegian oil company. I came back to New York. My parents said I was 27, time to put your big boy pants on and get to work. I got a summer job as a teletypist here on the floor of the stock exchange. There's no training to be a broker here. There's no training. You can't study to get a job on the floor. You've got to start at the bottom, whether it was as a runner, a squad, a teletypist, a clerk. You have to start at the bottom, develop trust, learn the game, let people know who you are, and then you go up the rung. It used to take 13 to 15 years to become a broker because it was a job nobody left. It was a great job. Everyone was making money. We had a lot of fun down here back in the day. We still do. We still have a lot of fun. But anyway, so I started as a teletypist on May 28th, 1985. David Green started at the same time. There were 5 Green brothers. They all ended up starting as squads on the floor of the exchange, and all of them went on to become market makers. They're all now left the business in some way or another, but they spent many years here. David, who I met back in the day, ended up was a squad, a clerk, a market maker specialist in some of the most amazing stocks out there. He ended up retiring at the age of 38 after Goldman Sachs bought Spear Lees for $4 billion, which was one of the market making firms. He left the street. He went out to trade on his own because as a market maker, you have all the orders in your hands, right? You know where all the bodies are buried. And it's a lot easier to trade than sitting at home, day trading in the dark. As many of you may know, it's a lonely job. If you don't know the rules, you're going to get your butt kicked. David went out and got his butt kicked. He lost $300,000 in the first 3 months of trading on his own after he retired at 38. He realized this was not a sustainable trading practice, that he would probably be broke in a couple of months, so he went out and started learning technical analysis. We've been friends over the last 35 years. He went out and did his thing. After he was able to get technical analysis and risk management down to a science. He opened up a private trading room, and he's been teaching people for the last 15 years. I ended up keeping my career here. I went on to become a broker. I got lucky. I got my seat within 3 years of starting as a teletypist. I was good at what I did, but it was more a function of the fact one guy died, one guy retired, one guy quit. And I got thrown right up the rung really quickly. I got my seat on April 7, 1988, and I've been a broker ever since. So David and I have been friends for a long time. He's been my go-to because I don't necessarily use technical analysis. I built a trading model around what's called the market on close imbalances. It's a whole nother long story for a different interview that I use trading for the hedge funds that I work for. David Green has been active trading and teaching people for 15 plus years, deep into technical analysis, risk management, money management, and above all, the psychology of trading. So during COVID, we saw an opportunity when the 40 million people came in. We always speak to each other and we said, wow, think about it. 40 million new people coming into the market. They have no idea what they're doing. They suddenly have access to trading. Why don't we put together an academy and a course to teach them? So we spent about a year curating a course. The course is called Wall Street Global Trading Academy. It's actually a school. We have thousands of students all over the world. And it's 16 hours, 21 videos, 200 hours of. So we coach and mentor. That's our secret sauce. Nobody out there. You've got Online Trading Academy, 25 grand. You've got all these people out there charging lots of money. You take their course, so you never see them again. Our course is affordable, accessible, and fun. It's $499, $699. Every Thursday night, we coach and mentor all the students. They come on, they talk about the trade of the week, their successes, their failures, any questions related to the course. And every Q&A that we have on Thursdays is recorded. So the archives is literally 200 plus hours of every Q&A for the last 2.5 years.
Wow.
Questions asked by students and answered by us. So as you're going through the course, you have questions in your head, and the only stupid question is the one you don't ask. Remember that. So everything you may need to understand, you can go into the archives in the course and learn it. It's broken down and sorted by subject. Fibonacci, we got a masterclass on it. Swing trading, we've got a masterclass on it. Double top, double bottoms, trend trade, far from moving average trade. There's a whole masterclass on it. We have a 6-hour course on options in the archives, let alone our whole course. And then we coach and mentor, and we have a boot camp. David's put aside 1 week a month where anybody who wants it, it's called Tier 2, $699, totally affordable, comes with coaching and mentoring. And a boot camp is a full week in David's private trading room, trading the markets live and learning the course in detail, every single section of the course live with David Green in the course while trading the market live. So it's all out there.
Without giving away too much private information, because I know it was different when David left the institutional side and had to kind of pick up some new skills. What do you know that is transferable from institutional over to retail, and what do you feel like just doesn't work when you try to move over? Okay, so the whole art of being a retail day trader is something that sort of blossomed into this incredible thing. There's, as I said, there are tens of millions of people doing it. It really wasn't that way before. Technical analysis has sort of exploded as people have sort of investigated and learned it. There are guys out there who fill your charts with a million different things. Your chart will look like air traffic control on 9/11. We try to tend to keep things super simple. We use RSI, we use exponential moving averages, we use pivot points. We do a little bit of Fibonacci, a little double top, double bottom. We have certain trades that we do. There are criteria that we teach that represent each one of the trades that's really necessary. Institutional trading is a different animal altogether. Me going out there and buying 1 million shares of stock for a customer who's trying to take a large position in a company because they've done their due diligence, they've used fundamental analysis, they like the story, the process, the people, they're putting a lot of money to work. An institutional investor is a whole other animal in its own right. What I do when I trade institutional money is completely different. And it's different now than when I did it in the 80s and 90s. It's a completely different story. We're in a different market. We're trading pennies now. There's electronic trading. There are algorithms. So that's a different animal altogether. I think people, your audience, retail traders, trading futures, options, equities, need to super high focus on technicals, on price action. We've got a market here
over the last 5 years, that's barely had one day that was not at least a 1% move in the market. We've got companies that come out with earnings that are good. You beat on earnings, beat on guidance, beat on everything, and the stock goes down $50. There's no rhyme or reason. There's so many different people playing. We know that in the option market, we've got this short-term, I don't know, what do you call it, the next day expiration stuff. You've got, I don't know much about options. Or same day. So you've got so many different people trading so many different ways in this market. You've got soft dollar trades. You've got guys who are doing option layoff business, meaning that they're big in options. They're sending their order flow here. You've got ETFs. ETFs is basically net a new incarnation of trading baskets of stocks, right? Everyone should know about ETFs. They're incredibly exciting. Look, you've got the SPY, you've got the futures, the MES, the NQs. These are financial instruments that are kind of ETFs in their own right. They're baskets of stocks, but ETFs also are basically baskets of stocks within a sector, right? Let's say you like the sneaker market and you go out and buy Nike. Well, you don't know what's going to happen with Nike. Maybe one of the guys who's got a Nike endorsement does something silly and the stock goes down 30%. If you like the industry and the sector, like luxury sneaker business, you can actually go out there and buy an ETF, which gives you exposure to the whole sector. So there's so many opportunities. The market tries to present us with so many different ways to trade it. Trading futures now is exploding. The futures funded trading market, there are a number of different platforms, Top Step, Apex. We're more prone to go towards Top Step. They've been around longer, started by a trader for traders. We know that they're legit. They're paying out their people. That gives people who don't have the money to set up an equity trading account access to the market. All the barriers of entry are down. You can actually go out there for 50 or $100 and actually open up a simulated trading account and get a payout, potential payout, if you learn how to trade the game through these platforms. So institutional trading is one thing. It's a different animal. I could talk about that in a whole nother way. I try to get people to focus and not worry about, people are really focused on what they don't have as opposed to what they do have. Suddenly, you all now have access to trade this market, so I want you to focus on that. You all have ways of day trading this market. You need to know how to do it. You need to understand about stop orders and risk management. Focus on, hyper-focus. Let's not get all ADD on this shit. It's not necessary worrying about what everybody else has and all that envy and jealousy. It's just not serving you well. Focus on what you have in front of you that suddenly, after 100 years, you have access to, and try and get good at it. There's that old saying, right? First of all, as far as a little bit of psychology of life, if you go out there and find something you love to do, right, and then get good at it, right? Spending 10,000 hours on something is what they say will get you to be great at something. Go out and do that with trading. Go out and get great at something. Don't worry about what everybody else is doing, because that just doesn't serve you well, right?
I think it's so important is do not treat trading like you can just show up and be successful at it. It's a skill set like any other 10,000 hours required. I want to do a quick rapid fire. If you don't mind, these are just going to be some fun stories from the exchange.
Let's do it.
That's going to be, give me your craziest story from the exchange. What is one of the most memorable experiences, whether positive or negative?
So I would say probably the crash of '87. I was a clerk. That was the largest market move we have ever seen. People should go out and do their own research on why that happened. We've had crises, the crash of '87, the bubble of 2000, the financial crisis of '07, and COVID. Each one of these crises and crashes has had components on their own. But for me as a broker, boots on the ground here on the floor of the stock exchange, I was a clerk. I was still fairly new to the business. And the market was falling like you may have seen in a movie. The movies hadn't even been made yet, right? The original Wall Street movie with Michael Douglas and Charlie Sheen hadn't been made yet, right? That's the story of Ivan Boesky. Go see that one. It's better than The Wolf of Wall Street. But anyway, that was a day where we sold off 30-something%, right? The market was trading at, the Dow is now at 40,000. We were at Dow 1,000. The market sold off 608 points, right? So we've never seen a market like that. We had no technology. I had orders being spit out. I had phones ringing, over 100 phones. I was a retail clerk at that time. I literally stood in front of the earthquake's happening again. Giddy up on that. Anyway,
Earthquake in the middle of an interview.
And we're still trading. Giddy up on that. No 4.7 earthquake's going to stop Roy and Einstein. Anyway, so that day was absolutely wild. Literally, we were open outcry, screaming and yelling stocks that were, I was trading digital equipment, stock traded for $168. It was down $68 that day. Literally that vision you have of guys running around, sell, stocks gapping down, right? Brokers literally falling to the floor in exhaustion, right? People losing fortune. So that was an amazing day. You know, so that's more of a serious day of crisis. I've had days that were super fun. We, you know, there used to be a lot of pranks that we used to do on the floor. Back in the day, we used to powder people's shoes, right? So back in the old days, it was very hard to get guests on the floor. It's still very hard. Post 9/11, it's virtually impossible. I had to like pay people off to get you guys here. Anyway, so when somebody came down as a guest, right, on the floor, and they were all excited about being on the floor. This is an amazing room. It's super excited. We haven't gotten your shoes yet, but you're lucky. They may get you before you're gone. But anyway, so when people were all consumed by the excitement of the room, someone would come up behind them, right, with a thing of baby powder and powder their shoes. And then brokers used to surround them and start tapping, and they would not notice it. And they would stop tapping on the floor saying, it's snowing in New York, it's snowing in New York. And you were a guest, you didn't know what was going on. Suddenly you look down and your beautiful patent leather shoes were completely destroyed. So they actually powdered George Bush. President Bush came down to the floor, they powdered his shoes. We almost got in real trouble for that one. But okay. So we've had other fun pranks. I ended up having a prank that was written up as the stupidest or the silliest thing ever happened on Wall Street. There was a comedian called Gallagher. He used to play in Vegas, right? He looked like me. He was bald. He had this crazy long hairdo. And he used to do these comedy skits in Vegas where he would smash watermelon. And everybody in the audience used to get hit by this thing. He came to New York to open up a hedge fund for celebrities. I met him outside. I brought him out to the floor. We were sort of chatting with each other. I was sort of enthralled with the guy. And someone came up behind him with a fruit plate, handed him a watermelon. He put it on. I had shaved my head for charity, so I was bald as a bowling ball. He put a piece of watermelon on my head and smashed it down, and the watermelon went all over the place. I ended up getting called upstairs by the governors and censured. They fined me $5,000 for conduct on becoming a broker. By the time I got back down after being censured, everyone on the floor had raised $5,000, handed me the money, and paid off the fine for me. So that's kind of the antics we used to do. Most of the antics were really serious. Most of the things we do down here are serious, and they're all about trading and supporting the markets and financial markets. And a lot of stuff I do is trying to educate and motivate people to get involved in the market. Over the years, you know, this is the most stressful job on earth next to air traffic controller. Right? So we often do things that are there to sort of, you know, to break down the stress that we go through on a daily basis, trading millions and millions of dollars. Some of them involve some pranks, and they've been fun over the years. No one's ever gotten hurt.
Look, out of all
don't do this with heavy equipment.
Don't try this at home. Out of all the stories of George Bush and a shoe, I think that might be the best one.
Yeah, that's a great story.
Can we compare different crises and just kind of give me your take on
100%.
How different the exchange was and how different the vibe was here? Let's go 01 crisis, 87, 08 financial crisis, 2020. Give me some similarities and differences here.
Oh, look, I've given hour-long talks all over the world about the different crises and crashes we've had. And I don't use the word crash lightly because people love to, you know, market goes down 300 points, we're crashing. It's not really, it's an irrelevant phrase in the post-COVID world where we can literally be down 1,500 points at 11 o'clock and already in bear territory, and by 3 in the afternoon we're in bull territory up 2,000 points. So let's reevaluate all of that. But at the end of the day, each one of the crises has had different components that play a major role in the way they unwind and the way the story unfolds. The crash of 87, it's a complicated story. It involved a lot of insurance stuff, but I think the one component that was the same on most of them were that every time we've had a crash or a crisis like that, where the market has sold off double digits and gotten torched, markets had the day before were trading at record highs. At the crash of '87, the day before, the Friday before Black Monday, markets were trading at record highs, and that day the market started to break. We lost confidence. There were some insurance issues. There was a little bit of technical issues going on, not technical like we know now, but the way the machinery worked on the floor. The market started to break down. There was a lot of fear in the market back then because it was trading at sort of a frothy level. And once people started to sell, it's like that line from Trading Places, Mortimer, everybody's selling, sell, then sell, sell. That's what happened. 2000 was the internet bubble. In 1995, 96, 97, similar to today's day, we were raising interest rates because of inflation. The market, the tech sector, which had just sort of was coming to be, was really taking over the market and was overinflating the market in a big way. So we had this wild rise. We had these raising interest rates. We had high inflation. Markets hit a super peak, and then the bubble burst. And that's a story that's super complicated, way harder for me to explain it to you now. But as we see, markets go up and markets go down, right? I've often been asked that question, Einstein, do you think the market's going up or down? The best answer I can give you is yes. It's the only legitimate, responsible answer. Let's go to the crash of 07, 08, which I was a big part of because I was here, I was trading it. It had a big impact on me, and it had... So everyone should study that one because it was a predatory situation. So let's think about it for a while. Markets were trading at record highs. Everybody thought that it was a great time to start offering and selling houses to people who could not afford houses, giving credit and credit cards to people who could not afford credit cards. They thought it was a good idea. It was completely predatory. So there were large, Countrywide Finance was one of the big real estate companies that decided to start giving mortgages to people to buy houses. And there was this big push for people who could not afford these things to do it. They were sold houses, they were given credit cards, hoping that being sold this bill of goods, that the market was going to start going up, that the houses were going to be worth a lot more, they'd be able to pay the houses off, they were going to be able to pay their credit cards off, and it turned out that that was not the case. They oversold the market. The market started to crash. It turned out these were bad mortgages because they were given to people who did not have the foundation to support paying the mortgage and paying credit that they could not afford. So what ended up happening was these brokerage firms were left with boxes of mortgages that were bad. What do companies do in finance when that happens is they put them in a nice big box with a bow on it and they sell it to somebody for 50 cents on the dollar. There's always someone out here to buy a bargain, right? Those guys didn't open the box. They used that as assets to trade the markets as well until they realized, oh, wow, maybe we should look in the box and see what's in it. They looked in the box and saw, wow, these are no good. This is bad debt also. So they sold it for 25 cents on the dollar in a different box with a different bow. By the end of the day, all of these things went down the line till the last guy suddenly realized that he had billions of dollars of bad debt. And then suddenly that news came out and the whole market crashed, right? And we had the financial crisis. What ended up happening, the banks that were backing these mortgages failed. The companies that backed these failed. And what ended up happening was the market crashed, right? Companies went bankrupt and we were in deep trouble. What came out of it afterwards was that the companies that were selling the mortgages were actually betting against the mortgages from working. It's kind of like me buying life insurance on my best friend and then poisoning you to death.
Yes.
I knew the future was going to be your death and I was going to make money on it.
But they just want to package them off and get rid of them
so that
they don't have to deal with the bad debt.
Exactly. So it was called credit default swaps. They took insurance out that the policies that they were selling and the mortgages that they were selling were good, right? Knowing they were bad. And then they were going to benefit from it when it failed, and they did. And those people got displaced from their homes, and it was devastating. Look, at that time when it happened, we lost Lehman Brothers, we lost a bunch of firms merged, Smith, Barney, Merrill Lynch, whatnot. People lost their houses, foreclosures up the kazoo. All these companies then ended up benefiting from it. AIG went bankrupt, they got bailed out. Right, at the end of the day, the Federal Reserve, like we recently saw that bail us out during COVID, they threw $800 billion into the market over 18 months, but it took 9 years for the market to get back to even from the crash of 07, 08, the great financial crisis. Think about those numbers. 800 million over 18 months, 9 years to get back to even. $800 billion. COVID came along, never seen that before. The whole world is dying in the streets. The world is shut down. Companies, look, had no way to support themselves because you couldn't cut trees, you couldn't build houses, everybody's locked in place, people dying in the streets. I'm a firm believer that if we did not put the money in the market that we did, we would all be on breadlines right now. So I'm a fan of Jay Powell, and it's proven itself out in the way the market has done since then. We're today here on the floor trading at record highs. So they ended up getting inflation from 8.5 down to 3. Let's stay apolitical. I'm not blaming anybody but the pandemic for all that shit. But what did we do when we were confronted by the greatest financial crisis of all time and a health crisis? The Federal Reserve threw $3 trillion at the market over a 3-month period of time, and we were back to even by August 19th. COVID happened March 15th. I got COVID. I almost died. I got meningitis. I've had 9 surgeries since. My life was changed. I almost lost everything. I was friggin' patient zero. That was March 15th, 2020. By August 19th, 2020, we were back to even. We were up 28% that same year, 2020. We were up 22% in 2021. Now, people say it's a function of the fact that we printed $3 trillion we put into the market. I don't know, it definitely was a contributing factor, but ended up happening was in 2022, suddenly we find ourselves with crazy big inflation. Nobody wanted to go back to work. Those who went back to work wanted to be paid more. Everyone was offline for 2 years because of COVID, had to go online. We couldn't just hit a switch and suddenly we're like cutting trees, building houses, all getting on planes and trains and automobiles. It didn't happen that easily. So the whole world had to go through this higher gas, higher food, higher prices and all that. In order to get through that significantly, we had to take money out of the money supply. How do you do that? Is you raise interest rates from 0 to 5.5% over 18 consecutive raises. We were able to get it. So that's a tool that the feds have to curb inflation. That's what they do. They did it. It worked. So all this shit happened, and it's ended up leaving us where we are today, with markets trading at record highs, inflation down from 8% to 3%, and we're in a much better place than we were a bunch of years ago, right? So that kind of gives you a breakdown of all the different components of all the different crashes, right? And it's complicated. You should read about it. It's absolutely fascinating. Markets are extraordinary. They are resilient. They can handle virtually everything that is thrown at them as long as it's like 1 or 2 things at a time. When we see perfect storms, like we saw in 87, 2000, 2007 and COVID, the market does break down. It's resilient enough to come back, and it always does. Over time, markets do go up, but we have had these bumps in the road.
I really appreciate you adding that last part, which is about the resilience of the market, because I feel like that's one of those things that people fear. And I also appreciate you breaking down the slow recovery of 08 versus that sharp V-shaped recovery in 2020.
Yes.
Because most people watching this, their experience probably came from 2020. That's Correct. The only crash they know. So they expect the next crash to be just as efficient at rebounding. So I appreciate you breaking down the difference. You got two last questions?
Okay.
Hope that's okay. One of them is, if somebody wanted to come and get a seat on the floor here, what would that require?
So historically, back in the day, people would come down. As I said, there's no training for this job. They would start at the bottom and they would go up the rung until they got they got the confidence and the wherewithal to show people that they were trustworthy, they were good with numbers, they were able to pass a number of exams, and then a company would sponsor them to give them a seat. They issued 1,366 seats in 1903. Those seats were traded at different prices. There was always a bid and an offer by people, because in order to trade, to have the right to trade, you had to have a seat on the stock exchange. In order to get a seat on the stock exchange, you had to be sponsored by a brokerage firm, a company that had a broker-dealer. Okay? All these components of this market don't exist anymore. There is no longer that incredible tranche of support staff of people who work here. They're market makers and clerks and brokers. So there's not as much demand, unfortunately, with all the changes that technology has happened to all industries. Those 70 market making firms have merged into 3. Those 1,366 brokers have merged into about 600. So there are no longer squads. There are very few clerks. There are still brokers. We are still the most significant human running marketplace in the world, and I believe it's way more important that there are humans behind the volatile markets that we're seeing. So while we're doing this interview, I'm looking at the market. We came in sort of flat this morning. This market has rallied huge so far today. We're up numerous hundreds of points as we were down yesterday. So we're seeing this crazy wild volatility. Unfortunately, my son does have a seat on the stock exchange. He is my partner, and he
Did you say unfortunately or
No,
fortunately?
Fortunately.
Okay, I was going to say.
Always work with your family sometimes. Anyway, but for the longest time, he always wanted to work here, and there was a period of time I wasn't sure that was going to happen. This used to be a very family-oriented business. Most of the market-making firms were family-owned businesses. Unfortunately, due to technology, due to mergers and acquisitions, due to the nature of the market, there's not as many as demand for them. More people are leaving here, unfortunately, the human element of the market, than are joining it, although the New York Stock Exchange has made a major effort to rebuild itself, rebrand itself, and bring people back and make the human entity that much more relevant. We've done a great job at that. That's why I'm still here. I've been here for 137 years and I'm still friggin' trading. I went to high school with Alexander Hamilton. He's buried across the street behind Trinity Church.
Peter actually designed the tobacco leaves here at
Correct,
the exchange,
exactly.
in case you guys don't know.
But anyway,
he was outside the tree.
a long answer to a short question was that the opportunities to get seats on the stock exchange, while they are still around, we just actually got a seat for Drew Cohen downstairs on the floor. He's one of our new interns who decided he really wanted to be here. So it is possible. You've got to get a job with a brokerage firm. You've got to spend probably a couple of years learning the game. You've got to take a number of exams that are really, really difficult to pass. You need to be sponsored by a BD, a broker dealer, and you can get a seat and you can become a trader. So yes, it is possible. It's not as easy as it was before, but it was really never easy because, as I said, it was a business that was very attractive to be in. People made good money doing it, but it took 13 to 15 years to go from being a runner, a squad who made $67 a week, running around the floor. It's a commitment, right? Anything that you do and you do well is a commitment. If you guys are out there learning to day trade the market, it's a commitment. Don't think this is about getting rich quick. It's not about that. And don't think that you're going to go to sleep, put the video under your pillow, and wake up and suddenly be a great friggin' trader. You're going to get out of it what you put into it. It takes 3 to 6 months. Okay, and I beg of you to try and sort of approach it as being a singles and doubles hitter and not a home run hitter. Because look, at the end of the day, I talk to retail traders all the time. And I'll ask guys, so how are you doing? And they'll go, wow, I'm betting 80%. I said, oh, so you must be profitable. Well, no, I'm down $5,000. I said, well, explain that to me. Well, I had 4 trades and I made $100 each. And on my 5th trade, I lost $8,000. Well, that doesn't make any sense. That's not a sustainable trading strategy, right? FOMO, hope, hype are not trading strategies. At the end of the day, as I said earlier, I'm willing to risk 50 to make 200. I'm not willing to risk 200 to make 50. So just think of it in your mind that when you get up in the morning and you sit down in front of your computer to trade and you're rubbing your hands together, how much money am I going to make today? Turn that on its head and think, how much am I willing to risk today to make some money? And if I set the parameters of my downside risk as opposed to thinking, how rich am I going to get today? It's the psychology of day trading that makes you either successful or a failure. And that's the basic net approach to this thing.
So good. Remove the emotion and focus on those 2 logical components, which is your win rate and your risk and reward. Exactly. And if the math makes sense, you're going to make money. And if you're trading off of hype or emotion, just like Peter said, not going to work out. Now, if Benny wanted to go and become a retail trader, and you and David could leave him with one piece of advice only, what would you and David tell him?
You know what, I don't really understand the upstairs game in this business. So like to be a retail trader up on a desk, I would rather he go out and become a day trader, right? Because I've seen, first of all, look, there's nothing more exciting than day trading and being successful at it. And there are lots of people. We have thousands of students who have literally turned their lives around. People who didn't know anything from a sock to a stock have gone on to become good day traders. People who have been retail traders and been struggling, we've been able to turn their lives around. People who left their jobs, lost their jobs, needed to make disposable income, we've been able to give them the opportunity by teaching them the rules of the game, giving them the playbook, as you do also. So look, there are a lot of opportunities to go out there and learn the game. I would say to him, look, never get emotional about money. Go out there and be a singles and doubles hitter, but learn the game before you do it. Don't get wrapped up in, look, there are people who trade, there are people who gamble. I always use the analogy of a guy who sits down. I've actually never been to Vegas. Nobody believes that. I'm not a card player. But there are two kinds of gamblers. There's a person who goes to Vegas, who sits down at the card table. He has a plan, right? He has a plan that he's going out there. He's got $1,000. If he makes 1,000 off his 1,000, he's going to leave the table, go to Ruth Chris, get a nice steak, go see Elton John, and it's going to be a beautiful evening. And then there's the other trader, okay, who has no plan whatsoever, who sits down, he's got $1,000, he's up 2,000, he's up 3,000, he's got diamond hands, he thinks he's the master trader, he goes all in on trades, the $3,000 profit turns into an $8,000 loss, he's been to the ATM 4 times, he's sitting out on the curb, drinking friggin' Hennessy, smoking cigarettes, he's got to call his partner to say, I don't have enough money for the friggin' rent. Those are the two things here. So there are secrets to day trading. Everything I know about day trading, I've learned from David Green, and we've taught in Wall Street Global Trading Academy. There are 5 secrets which I'm going to lay out to you. If you want to know more about this, you can go to my Instagram page. There's a link tree to Wall Street Global Trading Academy. You can go to WSGTA.com. It's a spectacular course. It's really full. We worked so hard to curate a great course. It comes with coaching and mentoring. It's accessible, affordable, and fun. First of all, if you want to become a day trader, have a plan when you get into a stock. Ask yourself, why am I buying or shorting this stock? Okay? And the only 2 reasons to do that are either price action or technical analysis. On every trade that you make, you must have a stop order. If you have a mental stop, you're mental. You have a stop order and you never change it. If you're in a trade and it goes against you, you're out of the trade, you move on to the next one. If you're in a trade and it becomes successful, take a profit while you can, up 50 cents, up $1. Move your stop order up to break even so you can never turn a winning trade into a losing trade. And then use a trailing stop to make as much out of your winners and lose as least out of your losers. If you're having a bad day, and we all have bad days, 3 losing trades in a row, you turn the machine off and go home. Doesn't make you a loser, doesn't make you a bad trader. You'll come back from a bad day, you'll come back from a bad week, but you will not come back from revenge trading where you turn your account that's up $4,000 into a loser of 20 grand, and I've seen it time and time again, okay? Never turn a winning trade into a losing trade, never turn a winning day into a losing day, never revenge trade. If you're losing, turn the machine off and go home. Those are the 5 secrets that David's taught me. Okay, we teach them every day. The psychology of trading, everybody can be taught to hit a buy button or a short button. It's what you do when you get into a trade that matters, right? No one got broke taking a profit, okay? And those are the simplest secrets that I can give you. Knowing what I just told you, you will be a 50% better trader, and I gave you that shit for free, right? And going forward, if you want to know more and you want to really become a successful day trader, go to Wall Street Global Trading Academy, check out David Green and I, check out my man Roy over here, and that's all I got to say about that.
Amen. Thank you so much, Peter.
Awesome.
Thank you.
Thank you.
Just a reminder, everybody, the FX Summit 2024 conference is the most anticipated conference of the year for traders, investors, and crypto. Meet us in Dubai, November 20th to the 24th, to come hang out with the Chartaddicts team, with Peter, and the list of all the incredible speakers. Packed schedule of 3 days filled with conferences, expos, and a chance to meet the biggest and brightest names in the trading space. We look forward to seeing you guys there. Click the link in the description to grab your tickets to the FX Summit, and we'll catch you in Dubai.